Hi, I'm Brooke Thackeray. Thank you for joining me today for a look at last week's market action. Let's jump right in by taking a look at the S&P 500. You can see here that the S&P 500 did have a down day, or a down week, I should say, last week, but we're still on an upwards trending channel, which is a positive. The RSI is still slipping downwards, a little bit of a minor concern, so we're seeing that divergence take place. The market is overbought from a full stochastic oscillator basis, but we can get some overall noise from that perspective. But so overall, we're close to all-time highs. We're still in an upward trend channel. Really nothing to worry about from a technical perspective. The key points really are perhaps the high in September or even the high in October in the middle of the W. If we broke below that, that's when I think investor sentiment would really shift. But right now, we're still close to all-time highs. We're still in an upward trend channel. It's positive. If we take a look at the action last week, now we did have a shortened week last week, so we started on Tuesday with a down day. Wednesday was a down day as well. And look at Thursday. Thursday had this big price movement between the day and ended up being closing down overall here. This was, I would give this to Janet Yellen here, saving the day on that one, in the sense that investors were anticipating what she was going to say once again, go big and really try and bolster the stimulus, and that's exactly what took place. Friday was a down day as well. So all 4 days last week were negative in the marketplace overall, which is a change because we've seen consistent up days for so long here. So we might be seeing a little bit of a shift as far as softness goes in the market coming up. If we take a look at the performance from the major sectors, we did see the S&P 500 was down just over 0.7 of a percentage point. The emerging markets outperformed. It's still negative, mind you. The Dow Jones, interestingly enough, was also outperformed the S&P 500. The NASDAQ, now this was an interesting one here. We saw a weakness in biotech and technology really pushing down the NASDAQ here. The Russell 2000 was also down as well a little bit. And the TSX Composite, which has an outperformer compared to the S&P 500. If we take a look at the major sectors of the market, this is the energy sector was once again the winner. This is just like the previous week as well. Financials did extremely well. So what we saw last week was rising interest rates helping the cyclical. So financials shot up well. The material sector was positive. The industrial sector was positive. And the defensive sectors were all negative last week as well. Technology, interestingly enough, once again, because of the rising interest rates, which doesn't really favor the technology sector, substantially underperformed the S&P 500. If we look at some of the subsectors of the market here, you can see here that in this case, we got the metals sector and the steel sector actually performing very well. Now, that was a large part on Friday. We saw that real uptick as investors really pushed into the reinflationary trade and in favor of those sectors as well. Biotech was down fairly substantially last week. Banks were up. Regional banks were up as well very strongly, once again because of the rising interest rates helping them out. Gold and silver were both in the negative last week as well. If we take a look at the VIX, the previous week, I did mention that we just dropped below that 20 level here on the VIX. And soon after that, sure enough, we saw this little bit of an uptick taking place on the VIX. We closed at 22.05. So we've popped up a little bit here from there. We're still not, as far as the fear gauge goes. Sure, it'd be nice to see it below 20. A lot of investors really favor that environment overall, but we're not substantially above the 20 level here. If we take a look at the Canadian dollar, and this is the top chart, so when this line's rising, that means that the Canadian dollar is outperforming the U.S. dollar. And this is West Texas crude as well. You can see the relationship. Interestingly, we did see that downtick towards the end of last week on West Texas crude, and at the same time, the Canadian dollar went up. And that was largely due to, once again, Janet Yellen talking about government spending increasing and really trying to push that forward, and investors really fearing that huge deficits as far as the overall U.S. government goes. Now, other governments are printing as well, but that was a focus last week. So we did see the Canadian dollar actually perform quite well relative to the U.S. dollar, even despite we saw that downtick in West Texas crude as well. Just a note, the Canadian dollar does have a seasonal period of strength that starts in April. April's the strongest month of the year for the Canadian dollar. It actually starts a little bit in March, towards the end of March as well. So we're getting close to that section. That's going to largely depend upon, once again, the direction of oil at the time. On a seasonal basis, oil and energy stocks also tend to do well in the month of April, which helps to support the Canadian dollar. If we take a look at the U.S. Treasury, the 10-year yield last week, look at this. We did see this uptick here. So here we are at 1.34, which was the climb here. And this is all about the reflationary trade with investors really focusing on that. And as the interest rates went up, we saw the cyclicals actually perform quite well. I also want to take a look at some of the news that we've seen over the last little bit here. Last week, GameStop was in the news. Once again, hedge funds are coming back into GameStop as it looks like it might be in a distribution phase. Hedge funds have been long the stock, short the stock. This probably isn't the best environment for the average retail investor to be playing in or investing in, because hedge funds are back at it again, and it's a difficult environment. If you take a look also as well, we did see the announcement that Roaring Kitty, or Keith Gill, his moniker is Roaring Kitty, is being sued for his involvement as he helped to push up the stock price of GameStop on Reddit. Now, we can sort of expect lawsuits to come out of something like this with huge social media platform, and price volatility is the perfect mix for this type of thing. And we did see, here he is here, when the U.S. Committee of Finance last week on the Hill had an inquiry onto the whole social media platforms and how it influenced stock price and the volatility in some of these stocks and how they're being operationally handled. And here's Roaring Kitty, or Keith Gill, being interviewed. I had to laugh because if you look in the back here, you can see the little headband that he would typically wear right here on his head. He's got it in this picture, and if you read the words here, it says, "Hang in there," with a kitten. Kind of cute. Also last week as well, we saw another Federal Reserve governor talking about, don't be scared of higher inflation. And it's almost like they've had this huge meeting. Well, they have actually talking about this, but this is really their key message. Don't be scared of inflation. Don't be scared of inflation. And in this case, it was Fed's Daily talking about San Francisco governor. IMF says Canada must justify post-pandemic stimulus spending. It needs clear fiscal anchor. Well, Canada really hasn't had a budget in a little while. They talked about anchors and guardrails, but they've been spending a lot of money. In fact, they probably spent the most out of the developed countries and not really benefit as much as other countries. But IMF is just warning, saying, look, in the post-pandemic era, you have to be careful. So although Canada is being singled out here, it does apply to other countries as well. It's not just spend as well. In this case here, this article, don't rely on the investment stock tips or social media stock tips. This is put out in the EU. Kind of a neat thing. We haven't seen some of the other regulatory bodies talk so much about this from a social media standpoint. Constellation Software last week announced that it may cut dividend because it wants to pursue bigger deals. This company has been an excellent company over time. Its modus operandi has been to acquire companies and bring them into the fold, and it's done it extremely well on a very cost-effective basis and very strategically. Now what it's after is it's really going after the vertical market segment in software, which is a lot more tailored software, which can have higher margins as it's unique, and it's also bigger deals as well. This is a great reason to cut a dividend, okay? We see dividend cuts being made because companies are in trouble, but Constellation's making the decision saying we want to reinvest that money into the company because we need that money to make some of the larger acquisitions that we're interested in. Also, last week we saw retail sales rebound. We saw a strong number, 5.3% last week number for retail sales. Very strong number, much higher than expected. Interesting, the retail sector and the stock market really didn't respond very well to that. You'd expect a much more substantial run than what actually took place as well. U.S. manufacturing rose last week by more than forecast. That's good news, and that's helping to drive up some of the cyclical, such as the industrials as well. Shopify last week talked about its earnings and profits as well. Now, the stock actually went down because it talked about it's going to be difficult for the company to make money at the same growth rate. It's not going to have the same growth rate as it's had. And they're also a little bit vulnerable to if the economy reopens and has a major reopening phase as well. And investors didn't like that message and pushed down the stock a little bit. Lumber prices Okay, lumber prices have been going up for quite a while here, but just a little bit of a word of warning here. We are at the end of the seasonal periods of strength for lumber prices. I know last year there was a lot going on with the supply, the demand, and as far as lumber prices go, but from a seasonal point of view, we are at the end of the strong seasonal period for lumber. Morguard REIT slashes its payout in half for the second time. So, here's a REIT that focuses on malls and also has a large property exposure in Calgary. So had a double whammy. Investors did not like that message and pushed down the stock. Jay Powell really talks about making sacrifices and we don't worry about the future. Right now we have to solve this problem. There's not a lot of consideration really to the long-term structure that's taking place, and we're seeing that consistently from the Fed. Bear Gold cuts costs, delivers sixth straight earnings beat, I should say. So overall, despite this, the gold stocks really didn't do that well last week. So they're just out of favor as gold has been going down because of rising interest rates and rising real yields, which has not been the environment for gold miners to respond positively to some of this good news that's come out. Here we are again. World debt has never been higher, and Canada's in the top 10 countries piling on. So that's just goes along with what the IMF was warning about before. We did see Canadian Tire closing all of its national sports stores. So interestingly enough, and investors like that news as far as the consolidation goes. And the stock actually went up in price from that. Walmart is forecasting earnings drop and more spending, increasing costs here. And investors did not like that news, and that actually had a pretty major impact on the market overall. U.S. housing starts fell in January for the first time since August. Now, we're getting some mixed messages on housing starts and sales as far as that goes right now. So it's going to be interesting. From a seasonal point of view, the housing industry on the market tends to roll over around this time of the year. So we'll have to see what happens. U.S. jobless claims jumped 861,000, which was much higher than expected. And that actually rattled the market last week a little bit. And the real focus is on employment as well right now, trying to get people back to work. And this was disappointing news overall to say that the pandemics have a larger effect than previously expected. Tech Resources takes Fort Hill's charge, reports fourth quarter loss. Didn't matter. They've got copper and, it's a metals company as well. And investors were more interested in that and pushed the stock price up last week despite that. Nutrien reports earnings beat, dividend hike, buybacks. Nutrien's been performing well as the costs of food have been going up. This has actually been helping Nutrien, and we've seen strong performance from Nutrien. Treasury Secretary Janet Yellen makes push for major stimulus. Sees bigger risk if not doing it. Now, interestingly, this is what you'd expect her to say. She's been saying this already, but on Thursday, we saw a lot of volatility in the marketplace, but she really did step in to save the day once again. Investors, yes, stimulus. We need more stimulus once again, which helped push the markets higher. And I'm sure she's going to keep with the message and actually ask for more. Magna raises dividend. Q4 profit revenue beats expectations. Now, when Magna announced the results on Friday, the market was going up. We saw some of the industrial stocks going up. Magna was up significantly on this news and was up 10%. I just want to say that the car companies actually have their strong seasonal period at this time, starting at this time of the year, late February into April. So this coincides, a positive move for Magna. At the same time, we're seeing industrials pick up and also strong seasonality as well. So we did see that take place. Anyhow, well, thank you very much for joining me at a look at last week. Thank you.